And Goldman Sachs chief U.S. equity strategist has an S&P target of 5,100. Joins us here at Post 9, David Kostin. Welcome to you, sir.
Nice to see you.
Nice to see you. You just got back from traveling the world, right? Europe and Asia. And I'm curious what you're hearing from global investors and what they're excited about.
So, Sarah, for the last 30 years, the macro strategy team at Goldman has traveled to Europe and Asia, as you indicated. We were in London, Paris, Zurich, and Frankfurt in the second week of January. We meet with a lot of sovereign wealth funds, investors, institutional investors. And we have an opportunity to exchange views. And then we head off to Asia and we visit clients in Japan, Hong Kong, and Singapore. And so there were sort of a couple of takeaways I thought was interesting this year relative to previous years. First of all, we do a survey, and about half of the portfolio managers are anticipating equity returns on a global basis somewhere between 0 and 10%, which is pretty consistent with our forecast. We're sort of up 3.5% already this year here in the United States. Now maybe another 3.5% or so left to go. Pretty modest upside, as you indicated, Sarah, to maybe 5,100. That's pretty consistent. About half the portfolio managers were in that camp. Another third were in more bullish, and they're somewhere between 10 and 20% type of returns. That's kind of return expectations. They were all in on the United States, and that's unusual because typically there's a home region bias. You go to Asia, and there's sort of a bias in favor of the companies there. Sort of understandable. They know them best. But that was not the case. Both in Europe and in Asia, most of the fund managers were inclined towards seeing the U.S. as the best opportunity set. And Japan, Carl, was one that they could have ranked number two kind of across the world that we saw. And kind of way down third, considerably down was China. A lot of concerns around China expressed both in the region in Asia as well as in the European investor community. And then Europe was sort of at the tail end. So that's sort of the geographic split. And then within the different sectors, people were more inclined towards technology. Not a shock there in terms of looking back in performance last year. Number two is healthcare. That was the sort of second most interesting opportunity set. And the last item, Sarah, is your favorite, Magnificent Seven versus the 493. There was a big debate. And it was basically, Carl, kind of 50-50 split, maybe a slight lean towards the Big Seven, but not. And that's in contrast with our view. My view is that I lean sort of a little bit in the other direction, which is a broadening of the market, the other 493. And sort of given a choice, actually, I'll take the 2000, not the 7, not the 493. We'll take the Russell 2000 and small caps. And that's sort of the lay of the land, having just traveled around the world in 2 weeks.
Has any of the recent action in the Russell made you question your call for small caps to do better, at least?
Well, the view within Goldman Economics is that the economy is actually growing pretty strongly, very strongly. And as a consequence of that, that actually benefits the more domestic orientation here in the United States of the small cap stocks. They have 30% of their borrowings are floating rate. And so the idea of the Fed cutting over the course of this year will have a one-to-one benefit for a lot of these companies where they have floating rate on the balance sheet, in contrast with some of the larger companies where there is actually pretty stable balance, strong balance sheets, but their debt isn't going to mature until past 2030, most cases, and there's not that much is floating rate.
And that fits with Goldman in the March camp.
And that's correct. That's sort of the idea there. And some of the net interest income for a lot of the companies with strong cash, strong cash positions should diminish over time as the Fed is cutting kind of 5 times, which is the baseline for the Goldman view. So that's the thought process there.